Welcome back, America. I'm Hugh Hewitt. A couple of days ago, Stephen Patterson joined me sort of from Texas, where he is part of the KeyCityCapital.com team. And if you're going to investigate KeyCity Capital, do so at KeyCityCapital.com/Hugh. Stephen, we got the bandwidth today. Are we cooking? Are we cooking with
We
gas?
are.
That's
Yes,
good.
absolutely.
Now I got to do all the disclosures again, right? So I am an investor in KeyCity Capital. The fetching Mrs. Hewitt and I invested in KeyCity Capital. Fund number 3, it is closed. You can't join that fund. It was years ago. You should read the prospectus before you join whatever fund is open. We'll get to that. And you should realize they are also a sponsor on the show. But I like talking to Stephen and everyone else, Ty and everyone else at KeyCity Capital, because they tell us about the rental market, and a lot of the people in America rent. Stephen, first of all, which fund are we in right now?
12, Fund 12.
And where is Fund 12 primarily located?
Really focused in the Texas market. You know, the Texas grows in population about 360,000 residents a year, and there's just a real premium on rental real estate right now.
So what is the demand for, and explain what the investment is if you don't mind. I always do, and I always get it wrong. We send you, and it's only for accredited investors, as I am. You've got to have a certain amount of money. You send KeyCity Capital, the minimum investment is $100,000. You send them money, and then they put it into a fund. They buy stuff. But how does it work?
Sure. What we're doing is we're buying rental real estate. We're going out and buying apartment complexes across the southeastern United States. So we're really in that Texas across to Florida, Florida up to South Carolina back across to Oklahoma, that southeastern portion of the United States. And we go out and we buy an apartment complex. And why that makes sense for people is two things. One, we're buying rental real estate and we're buying literally hundreds, if not thousands of units. So it de-risk the investment in the sense of an investor or one of your listeners buying their own single rent house, right? We're talking about thousands of units that we're buying. Number two, we're passing back depreciation on the asset to the investor, which makes it tax advantaged. And if they meet certain criteria, those benefits of that tax advantage go up even more. And so we can pool a group of people together and buy a very large property that has rental income, that has segmented depreciation, and has appreciation and growth over time, and make an overall return to the client.
And what I like to tell people when they ask me, why did you do this? Because we did invest with KeyCity Capital. It's because I wanted to diversify into real estate. And I don't know much about REITs, but I understand apartments. And I don't know anything about commercial real estate, except it's very bad to own right now. And I do understand that apartments are becoming more expensive everywhere. Has that trend changed as inflation cooled to 2.9% this month, Steve?
Yeah, no. So real estate has had a tremendous value appreciation over time. And so one of the ways that we're handling it is we're de-risking the investment for our clients. And what that means is we're not using a bank. We're paying cash for the asset. We're not going to pay a bank 6.5% on a loan right now. The only person that makes money in that scenario is the bank. Well, you know what? If I go pay cash, that 6.5%, I can turn around and pay to my clients, because otherwise I was going to be paying it to a bank. And that's what makes what we're doing very unique and very special right now is I'm taking the bank out of the picture. I'm de-risking the investment. I'm de-leveraging the investment. And I'm making sure that we have a cash flow component to our clients.
So fund number 12, and people can get the prospectus if they go to keycitycapital.com/Hugh. They'll know who you are coming from. You're coming from me. If they get the prospectus and they want to get involved, how much time do they have to get into Fund 12? Because what happens, people do get shut out. They act too late, or they wait too long, and the fund fills up. How much time do you guess? And it's always a guess, because you might get a giant check today and you might have to close Fund number 12. How long do you think it'll be open for, Steve?
No, I think I'm open probably through the end of the year. And you know, we can always file an extension if need be. We have some very specific assets targeted. And you know what? As this market is changing daily, you know, we may find other things. But I would say 3 to 4 months would be a reasonable expectation of how long Fund 12 will be running right now.
And about just a rough about how many people are like my wife and I, a limited partner in a fund? I mean, how many total clients do you think you have? It's not millions.
No, no, no. In each fund, you typically have 100 to 120, somewhere in that general range. I have funds that are as large as $100 million, and there's a few more. And the fund that you're involved with was a $50 million fund. So there's a few, there's not quite as many in that one. But, what I would say to anyone is, people probably own a mutual fund in their IRA, and the reason you own that mutual fund is because it had multiple stocks in there and it spread your risk around. Well, that's what we're doing, only we're doing it with an apartment complex.
Diversify, diversify, diversify. And if you want to do what I did, get into some real estate, what the fetching Mrs. Hewitt did, I trust KeyCityCapital.com/Hugh, and we did so. We put our money where our mouth is. We really believe in it, and we're very happy with it. KeyCityCapital.com/Hugh. Thank you for listening. I'll be right back. Stay tuned to the Hugh Hewitt Show.